Welcome, everyone. Awesome. We have a little bit of good news for today. I have a lot to talk about on macro, got a lot of strong opinions. I'm happy to see this. CPI was in line, immediately sparking what I think is a bear market rally. The question is how far it will go. So we'll talk a little bit about those technicals first. I want to say Jen Psaki did a wonderful job yesterday setting us up for this, talking about that we're going to see extraordinarily high headline numbers with the CPI today, and it really came in line. And it combined with Biden speaking today at 3:45 about inflation, I did think that we are going to be way above expectations at like over 10%, but it came in at around 8.4%. Which was, I think the headline was slightly ahead of expectations, but the core was slightly below. So basically, I'm calling that in line. So what you're seeing here is immediate pop in the markets. Um, Longer term, I think it's a bear market rally. Like I'm still in the camp of I'm very bearish, especially on the mega cap. So let me talk about that first, the longer term macro picture, and then we'll go back into this bear market rally to see how much we can get out of it. But let me pull up Apple. I've been telling people I've been bearish for months. I'm not short right now, but I'm just worried. Look at the 5-year chart on Apple, right? Note the COVID excess. This was the pre-COVID high from like 80 to 168. Essentially, no correction, nothing, right? As opposed to every other asset class, which has gone back and tested that pre-COVID high. Nothing in Apple, nothing in Google. Probably Microsoft is a similar situation. And I do not think that consumer discretionary spending is going to hold up with all this inflation. I think people are going to defer iPhone purchases, defer technology purchases. I think they're going to buy fewer AirPods. So I'm very concerned that the final leg to drop in this bear market we're seeing is going to be a drop in the mega cap tech stocks, which will then in turn finally take the SPY down to a corrective level, and QQQ can possibly see lower as well. So I'm concerned about that longer term. I'm currently not positioned for it. And the danger of that is, all those risk assets, the microcaps, the biotechs, the ARKKs, they've already come down, right? Big time. But if the Qs and the SPYs correct, because the mega caps are correcting, they can go even lower. And you can see some of our favorite stocks that we think are undervalued go to absurd low level valuations. I think that's possibly in the cards. And to be honest with you, I'm not positioned for it right now. So I like this rally we're getting because I want to take advantage of this to reallocate my portfolio at the next top and be prepared possibly for another drop to retest these lows. And why aren't I prepared for it? Well, because this break, honestly, of the 200 DMA on QQQ tricked me, right? This whole part up here, this whole move was kind of expected. I think you guys were around when I basically removed all of my hedges as soon as they raised the rates. That was a playbook that a lot of people had, right? Sell the rumor, buy the news when you first increase the interest rates. And we talked about resistance levels at the 50 and the 200 DMA. I was surprised to see the break over the 200 DMA, and I started rationalizing why that would happen, and sentiment got the best of me. I ended up, at these levels, instead of taking anything off the table, I ended up taking excessive risk, and I'm in a little bit of a pickle here. So I'm very happy to see this bear market rally. Something to point out over here on the QQQs is, oh yeah, look at this. Look how beautifully, there's all these technicians, there's Elliott wave theory, there's Rex. You can find people on Twitter that they do all kinds of lines and stuff like that. But time and time and time again, the simple moving averages work, right? So yeah, I overshot it by a little bit, but it's just a general guide. You know what? And it's so hard to do, though. It's so hard to execute because when you're at these levels like that 200 DMA, okay, you take some off the table. That's resistance. It's such a obvious thing. But when you're in that moment and everyone's bullish and the sentiment's high, and maybe it overshoots by a couple dollars, right? You begin doubting yourself. So it's difficult. But in retrospect, I cannot find any better technical indicators in the 20, 50, 200 DMA they always work so beautifully. Just look everywhere. Look at these supports. Look at the resistances. It's just gorgeous. So anyway, the QQQ now at 347.05. You can see the next resistance level is 349. So I do expect a pullback there, right? But after it pulls back and it retests it, will it go higher? Maybe. Can it go all the way back to the 200 DMA? Maybe. I hope. But expect that each of these resistance levels, each of these major DMAs, to see some resistance, a pullback, possibly a retest to go higher after that, or they become supports. But these lines are just brilliant. They always work. Unbelievable. So I did talk about, yes, I did talk about Apple and my concern with longer term with recession and decreased discretionary spend. This is the weekly moving average on Apple. I am concerned at some point this can break that 50-week moving average, and we see a correction somewhere in this area. So that's something I'm going to keep that in mind. And because I'm keeping that in mind, hopefully that will discipline me to take some off the table at our next resistance levels on some of these risk assets I'm holding. Looking at Tesla, you could see this morning it's butting up right against the 20 DMA. Will it break and shoot higher? I don't know. I hope it does. And that's going to impact all the lithium stocks today as well, which have been following Tesla very, very closely. So you can see risk on basically all over the place. A couple other things I want to note out. Gold is just exploding this morning, which is perplexing me a little bit because the CPI was in line. I mean, the only surprise would have been an upside surprise. So why not buy gold yesterday? They're great. We pointed this out on the show yesterday. It broke the 20 DMA, and I noted the MACD was in a much better position than when it broke the 20 DMA over here on March 24th. It is a flip, just flip green. RSI is still oversold, not overbought yet. So I'm very happy to have a nice position in gold in my IRA. Couple other things I wanted to note before we go. Oh, yeah, check out oil. At this point, I really believe all the geopolitical risk in oil and the supply chain issues with Russia, all of that is priced into oil. So what are we seeing here at this point? I think what we're seeing, check it out. Oil was down yesterday, up this morning. I think oil is now a proxy for the economy, and it could give you early signs of recession. So you want to watch things over the coming months, inventory builds and things like that from demand destruction with higher oil prices, which can cause a recession. This is very, very often the trigger to a recession, and possibly the final leg lower in a bear market can happen when you see oil dropping off and a recession hitting. Of course, nothing's a guarantee, but these are the things I'm watching for. And uranium, we talked about yesterday, CCJ chart on fire. Excellent. We're very happy about that. All right, moving into some specific stocks. Yesterday, we did a great job identifying support levels on both SMSI and KODK. We called on the show yesterday at 350 support level, and boom, it touched it right on the dot. I love it when I agree, when we get triangulation with my colleagues. So the 50 DMA was the 20 DMA, which, as I just said, I love the simple moving averages. And it also happened to be something with Rex's fancy charts. He flagged the 350. So when we agree, I love it. We called that out. Hopefully some people were able to take advantage of that 350 support level yesterday in SMSI. And KODK, man, I was all over this. I called a triple support yesterday. Not only the 200 DMA, but also the 20 DMA, and also at 618, where the majority of the millions of shares were bought. Sentiment support, I'd call that. So triple support yesterday. It held. And now it's time to test their theory. I've been saying for a while is that KODK is obviously being impacted by algos, which trade along with the QQQ. It's thrown in with a bucket of tech stocks. So no matter, I've been reading the tape. I mean, no matter how much buying pressure there's been on KODK on red days, the algos do not let it go green. And I think in order to do that, they got a short. So you see all these buyers coming in, because I think the story's getting out there, and everyone I've talked to, people at deep pockets, are intrigued by this story and they're buying. So I think the algos make sure that KODK is down on red days, which means they may have to short on those red days, which means we can get exaggerated green moves on green days. So let's test out our theory. My theory, let's see if KODK has an explosive day today. I hope it does. Okay. What else should we point out here? Am I in my specific stocks yet? I am. We talked about KODK. We talked about SMSI. Unfortunately, my newsfeed is dead. Oh, it just showed up again. It was dead all morning. So let's quickly look at this to see if there's anything we got to look at. SMSI appoints new members to the board of directors. So take a look at that. I'm sure in our community there'll be some conversation to see if there's anything important about that over there. Tilray buys Hexo debt and Inks Alliance with a risk on day. I'm sure you can see Tilray having a nice move today. Let's see what else we got. Okay. So actually, let me scroll down a little bit more because my newsfeed was down all morning. I couldn't see anything. Okay, there's all that Tilray news. All right, great. Oh, there's PHRRF news. So this was a VIP pick way back when by Colton Tao. So pay attention to our community. See what Colton says about PHRRF. So in any case, I got Vidler Water up here. Hopefully, we're going to have an article coming out. We submitted to Benzinga yesterday. So who knows? Today, tomorrow, this week, we'll see if they accept it. We'll see if they want edits. But that'll be interesting if that news comes out on Vidler Water. And what else are we looking at? I mean, wheat and agriculture continue to just kill it. Look at that wheat chart. So wheat is doing great, very similar to the gold chart, very similar, almost identical to the gold chart with the 20 DMA and doing better than the last 20 DMA break and the MACD flipping. And you know my bull thesis on wheat much stronger than the bull thesis for oil when we talk about the new FANGs, fuels, agriculture, aerospace, nuclear, and gold. The agriculture space has been one of the spaces, including all the potash stocks, which have been killing it more than anything else. And why is that? It's because you can't. Two reasons. You can't turn supply on like you can with oil so easily. You got to plant. Reason. Sorry, I got cut off there, but yeah, what did I say? The supply you can't fix so easily. The other reason is demand destruction. You're going to see less demand destruction with food than you see with oil. So, I mean, it all makes sense. The chart makes sense. The sector moves in agriculture makes sense. And you know what? You probably should have some agriculture exposure in your portfolio. Probably good for trade ideas. I talked about this yesterday. If you guys see any microcaps or unloved agriculture stocks, which are support levels or haven't moved, let the community know. I think those will be some great trade ideas. I think I pointed out yesterday, ARKW is at the 200 DMA. Maybe that's a trade over there. I'm not in it right now. BCRX we talked about yesterday. Did it find support? I hope it did. $11. I noted it could. We had a couple other lower support levels at 10 right there. You can see it there at this top right here. So that didn't quite happen, although it got close. What was that, like $10? So it got very close to that support level yesterday morning. Pretty much there, actually, like 10. Okay, missed it by like 19 cents. So that was a strong support level. Hopefully the bottom's in, but hey, this is the strongest support here. You never know, $8 or so. So I'm in BCRX, getting slaughtered, but that's what it is. All right, can't win them all. KMI, I don't know, man. I think the momentum is kind of stalling on KMI, but I still have a position in that. Talked about, lithium stocks may do well today. Watch the 20 DMA on Tesla. I'm a little bit underweight lithium stocks right now. I may pick something up, especially since Elon Musk a few days ago, I think over the weekend, hinted at getting into the lithium business. So whether that means they buy a lithium mine or they do it themselves, something is happening. And I'm sure we will see some sort of huge development or transaction with lithium involving Tesla and Elon Musk in the near future. So look out for that. All right, let me just see. Oh, I want to talk about PTE for a second. So this one is a stock that was brought to us many months ago from Matt Kolb in the community. We'd played it early in the year up here for big gains. If anyone followed me on that trade, I've avoided it all the way down. I did meet with management a couple days ago. Personally, I wasn't impressed. I didn't get in. And hey, look, they have a bad cash situation right now, and they don't have like any pen. They're like, yeah, we're gonna look for deals. We're gonna find a way to deal with their cash problem, sell the company, whatever. But there was like, it didn't seem like anything was cooking, honestly. And then Zach Morris picks it up in after hours yesterday, just tweets $1. That's it. PTE $1. That's all he tweeted, and that's what we got going on here. And then like an hour later, is it 50 cents yet? Man, I don't know. If I was in this, I'd sell it with all respect to Matt Kolb. He's a great contributor, has great ideas. but I'm not interested in PTE. So let's see. I think that's it, and it's 9:15. So we're gonna call it a show, and we'll continue collaborating in the community. Thanks, everyone.